I'm John Kaiser at the Metals Investor Forum in Vancouver, January 17th, 2025. I am here with Fred Earnest of Vista Gold Corp. Fred, welcome to Vancouver.
John, thank you. It's a pleasure to be here.
According to the updated March 2024 feasibility study, Vista Gold's Mount Todd project with its 400,000 ounce annual production potential meets development hurdles. Today, at $2,600 plus gold, the project is very much in the money and your stock is ridiculously cheap. The 50,000 ton per day mining plan is big enough to interest major gold producers, perhaps only major producers. If there were interest from majors in acquiring and developing Mount Todd in the context of current gold prices, the stock should be trading in the 3 to 4 times its current level. Why do major gold producers who have the capacity to fund a $1 billion capex appear to be uninterested?
You know, that's a very interesting question, John. It's one that we discuss on a regular basis, and there's no single answer to the question. You can imagine that since we published the feasibility study results, we've talked to a lot of those majors, and one of the things that we see is a significant interest in immediate cash flow. And I think that's manifest in the fact that the senior producers are seeking to merge with other producers or acquire other producers. They're not prepared to take on the development risk today. For some of them, Australia just doesn't fit their geographic profile, which I find very interesting. We find Australia to be a very, very great place to work. But if you look at the last 5 years, there's been a couple of senior producers that have sold their assets and left the country. Grade has been an issue for a couple. Our deposit is 0.84 grams per ton. Looking for better grade than that. But the other is the criteria that some of the senior producers are using in their economic evaluations is still very, very conservative. Mm-hmm. And if you use $1,500 an ounce in your economic analysis, it's pretty hard to make a lot of projects work, So I don't understand the way the senior producers think right now. We're very pleased. We think we have a great project at Mount Todd, large scale, fully permitted, and our view is that the current scenario can't continue forever. So it's been a little bit of a challenge, but I know we're going to talk about some other things, and we've got some plans that we think will maybe.
Yeah, this is my next question. So let me get to it. There is a saying, go big or go home, which Vista Gold did with Mount Todd. Last year, you decided to undertake a feasibility study for a smaller 15,000 ton per day mining plan, as if somebody has been whispering in your ear, go small or go nowhere, which is what your stock's doing right now. What is the strategy behind running the numbers for a smaller scale mine?
I think there's 3 points really. We heard from a couple of the people who have looked at Mount Todd that they would not build it at 50,000 tons a day. That it's their corporate preference that they build at a smaller scale and then expand. So that's maybe there is somebody whispering in my ear, so to speak. But more importantly, by looking at a smaller scale project, we're evaluating a project that will have about a 60% lower initial capital cost, while preserving the opportunity to be expanded at a future point in time. So obviously that makes the project easier to finance. It increases the number of companies that could potentially be interested in the project, resulting in a nearer term opportunity for our shareholders. Last of all, the other thing that we're going to do with this new feasibility study is that we're looking at raising the cutoff grade. Presently, we use a cutoff grade of 0.35 grams per ton, which is our break even is 0.25. So we're being a bit conservative, but we're going to raise the cutoff grade to something in the order of 0.5 grams per ton with the target of having a reserve grade that's close to a gram per ton. It'll result in a drop in our reserves, but it's our view that 5.5 million ounces of reserves at a gram per ton will be much more highly valued than 7 million ounces at 0.84.
And of course, if an intermediate producer acquires this through some sort of paper deal, they'll spend at least a year thinking about it, and maybe during that period, the market will come around to accepting that $2,700 gold or higher is the new reality, and go back to the original 50,000.
Well, that's
ton
entirely
per
possible, right?
Scenario.
So,
All right. Last year, you undertook a drilling program at the northern end of the Batman deposit called the Southern Cross Lode. After spending nearly 2 decades on Mount Todd to deliver feasibility study for a large-scale mining plan, what is there left to accomplish with more drilling not aimed at finding more distant satellite deposits?
yeah. Well, our drilling program last year focused on 2 areas, and actually the northern end of the Batman deposit is distinct from the South Cross Lode. They're actually
okay.
two different deposits. Part of the reason we undertook the drilling program is that in late 2023 we reached an agreement for a royalty with Wheaton Precious Metals, and one of the conditions of taking their $20 million was that we put money in the ground in the deposit area, something that would benefit development of the project. At the very north end of the Batman deposit, we've relied on historic RC drilling. And one of the things that we've seen in the past is we've drilled areas that were modeled with RC drilling and converting that to core drilling, is we've seen a little bit of an uptick in the grade, and we've also seen better definition of mineralized boundaries. And so at the northern end of the deposit, we were hopeful that, and you'll see some news out in the next week, but we were hopeful that you would see a bit of an uptick in the grade, increase in the resource base, and this is within the pit, so that means converting inferred resources to M&I resources. That becomes reserves with a modest increase in grade in that part of the deposit. Most of our 70,000 meters of drilling has been in the central and south end of the deposit as we chase the core zone deeper into the deposit. The South Cross Lode is a parallel structure that's several hundred meters to the east of the Batman deposit, and it's the start of a series of continuation of mineralization that we identified in our 2020-2022 drill program. In that program, we tried to establish the continuity of mineralization from the Batman deposit over a 5.4 kilometer strike length, and the South Cross Lode was the closest of these structures that we identified to the Batman deposit. And so this is on the edge of our current resource shell. The RC drilling and the 2 holes that we drilled in 2020, 2022 showed some higher grade mineralization closer to the surface. And so we designed a program where we drilled about 3,400 meters, shallow holes, 150 meters, targeting the upper part of this deposit, with the idea that perhaps this could turn into a little bit of a higher grade starter pit for the Mount Todd project. So that's the reason for the drilling and why we drilled the 2 different areas.
Okay. While we're on the topic of exploration, the Batman deposit sits within a large land package of almost 1,600 square kilometers. I am aware that it is not your intention to mount a major exploration program, but whoever acquires Vista Gold will be thinking about new discovery potential. What type of gold deposit is Batman? What would be a well-known similar deposit in Australia? And has the time management spent with Mount Todd since 2006 given cause to believe that this is a district with potential for more such deposits, perhaps even richer ones? And what needs to be done to make or break that potential, if it exists?
Yeah, so the Batman deposit is a sheeted vein system. The host rock is a package of highly silicified sedimentary rocks, siltstone shales, and greywackies, and cut by quartz and sulfide veins that vary in thickness from millimeter or 2 up to 10 centimeters. Vein density is anywhere from 5 veins to 17, 18 veins per meter, over a width of 200 to 300 meters. So this is a very big deposit. And you asked about other well-known deposits in Australia that are similar mineralization styles. There's actually 2 that come to mind. One is the Cadia deposit. Part of their deposit is a porphyry, but one of their deposits is a sheeted vein system. And then the Cali deposit at Newmont's Tanami project is a narrower and higher grade sheeted vein system. And so, there's the style of mineralization that we have there at Mount Todd. We talked just a minute ago about the extension that we've already identified. With some places along a 5.4 kilometer strike length. What we see as we go out farther north from the deposit is it becomes much more narrow, and the density of the veins changes. And so, you ask, what's it going to take? Within the mining licenses, which is this 5.4 kilometers, it's the drilling that we did on the South Crossroad was very interesting because it's the first time we've spent a lot of time drilling one of these narrower structures and trying to understand it. Okay. And so this has given us an idea of a model for exploration that we might pursue within the mining license. District-wise, we control almost 1,600 square kilometers. Our property is located at the southeast end of the Pine Creek geosyncline. We're part of the Pine Creek Gold District, a district that's produced gold for over 100 years. We think there's tremendous exploration potential on the exploration licenses. Our geologists have, over the years, with grassroots exploration, geophysical work, soil samples, identified at least 10 targets. And what we need is, a pretty sustained budget of, $5-6 million a year over a 4 or 5 year period to go out and really start to evaluate and drill test the exploration licenses.
Okay, so that's sort of this extra bonus that somebody taking you out could pursue while they're doing the final engineering for whatever scenario.
Oh, absolutely. We think there's tremendous upside potential at Mount Todd.
Excellent. When Vista Gold acquired Mount Todd in 2006, it came with a tainted history, having twice failed as a mine. The low Vista Gold market valuation, despite good feasibility study numbers, implies that the market thinks nothing has changed. What did you identify as key problems, and what have you done to overcome them since 2006?
Yeah. Well, the first thing we started doing when we acquired Mount Todd was we started drilling. It had 3.3 million ounces of resource when we acquired it, and now we have 9.4 million ounces of total resource, and we're going to have a new resource estimate this spring to incorporate the new drilling. And so we've grown the deposit, one. Mount Todd has a reputation as being a very hard ore body, and we don't deny that. We recognize that it's hard, but the last time I checked, John, we still call ourselves the hard rock mining industry.
And just for the audience, hardness is an issue because grinding sucks up more electricity. This is what people don't like about hardness. Is that correct?
Yeah. I mean, crushing and grinding to an optimal size costs money. It costs energy, and but there's ways that we can deal with that. And we think that today we have crushing and grinding technology that wasn't available in the 1990s. We've done a lot of test work with high-pressure grinding roll crushers and two-stage grinding. And so there's been tremendous things where we've been able to today demonstrate that we can grind to, instead of 150 microns, we can grind to 40 microns more efficiently than they could 30 years ago. And as a result, our gold recovery has gone from 70% in the original plant that was at Mount Todd to we're estimating just shy of 92% today by being able to grind to 40 microns. So those are some of the things. By drilling with core, we understand the mineralogy. We understand the minerals that we're dealing with. We've been able to determine that the gold really is just in these quartz and sulfide veins. It's not in the country rock. Some of the other things we've done is just we've advanced the project with permitting. I mean, it's really a ready-to-build project today. We've established long-standing relationships with the Aboriginal community and the local community, and we enjoy great support. So there's really been a lot that's changed with the project, both in on the soft side, the social side, but the technical side with expanding the resource, better understanding the deposit, and developing a comminution circuit that we're very confident will be able to handle the ore body that we have.
Mm-hmm. Good. Mount Todd was encumbered by a heavy royalty and tax burden owed to the Northern Territory government and the indigenous people in whose jurisdiction this project sits. In recent years, that changed in your favor to such a degree that you were able to sell a new royalty for $20 million to Wheaton Precious Metals. What prompted these changes, which are usually in the opposite direction?
Yeah. You know, as our relationship with the Jawa and Aboriginal people has improved and grown over the years, and we've become very comfortable being candid with one another, we realized that originally they had a 10% participating right, and they're very risk averse. They don't want to be the owners of a gold mine with all that means. And so we were able to negotiate with them for a sliding scale royalty. It's very much a business-oriented relationship where when we do well, they will do well. And when we do poorly, they'll do poorly. Our royalty with them varies between 1 1/8 and 3%. And so when the mine does very well, they will do very well. And so it's that's been, and in exchange, we eliminated that 10% participating right. Second of all, with the Northern Territory government, for years, as I've met with government leaders, ministers, chief minister, treasurer, et cetera, we've talked about the competitiveness of the Northern Territory compared to other jurisdictions. And the Northern Territory has a royalty structure, or had, that was based on net profits. And for a project like Mount Todd, that equated to somewhere between 6.5% to 8% royalty based on gold price. When we look at Western Australia, we look at Queensland, British Columbia, the state of Nevada, other significant gold jurisdictions. That means that people would logically be persuaded to invest in other jurisdictions rather than the Northern Territory. And a couple of years ago, the Northern Territory government formed a task force, Minerals Development Task Force, to evaluate what it would take to make the territory more competitive. And one of the recommendations is exactly in line with what I've been telling government leaders for most of the last decade, is that the royalty is an issue. And so last spring, the government legislatively approved changes that became effective July 1. And now we have an ad valorem royalty structure, which is for gold producers like Vista at Mount Todd that produce doré. It's 3.5% fixed. Mm-hmm. And so that's been essentially cut our royalty in half, which allowed us to be able to consider a 1% royalty to Wheaton to be able to allow us to fund our activities presently.
So one final question. Last year, gold producers as a group underperformed physical gold, which had gained 26% and made a record high, a price that is 69% higher in real terms than $400 in 1980, inflation adjusted to the present. Explorers and even advanced developers such as Vista Gold barely budged last year. Why are investors no longer treating gold stocks like they did during the 3 decades following gold's initial peak at $850 in 1980? And what needs to happen to make gold stocks hot again?
Yeah. I think there's...
And you can't spend the next half hour going through that.
No, but there's a couple of points. I think one is that, there's been a fundamental shift. People right now, the investment community, and it echoes what we said about the producers, that they're looking for risk-off opportunities. They're following cash flow today. Some interesting research that was published last August or September by S&P Global Market Intelligence. They did some research and they looked at the number of major gold deposits that have been discovered over the last 35 years. And if we break it down by decades, the last decade of the 1990s, there was 180 gold deposits, 2 million ounces or bigger, that were discovered. The first decade of this century, 2000 to 2009, that number dropped to 120. 2010 to 2019, the number dropped to 42. And since 2020, this decade, there's been 5. We as an industry can't continue to produce 3,000 plus tons of gold per year without discovering new deposits. And I think that at some point the market has got to shift and recognize that this future production is going to come from large deposits in great jurisdictions like Mount Todd. Mm-hmm. And so I think that I think that the challenge that we face is that people don't appreciate the value of gold in the ground and the effort that it takes to move a project from a discovery through to being ready to build. And until we start to appreciate that, we're going to stay in the market that we have. But I'm very optimistic. I don't think we can continue this forever. And so, we think that projects like Mount Todd are well positioned to see a very significant improvement in valuation as the market comes to the realization that status quo isn't viable in the future.
Excellent. I have been speaking with Fred Earnest of Vista Gold Corp. In Vancouver at the Metals Investor Forum. Thank you, Fred.
Thank you very much.